Welcome back. You're watching the Mortgage Busters show. Steve.
Greg.
So, the three things that viewers could go out tomorrow and start paying their loan down a lot more quickly. Number one is the offset account.
Correct.
Number two is weekly, fortnightly payments.
Yes.
And number three is a one-off lump sum payment.
Yeah, absolutely. They're the three critical things that everybody should be considering to do with their mortgages.
Fantastic.
Why don't we just have a look at the whiteboard and let's see how an offset account works, because
It's all yours.
yeah. Let's use a nominal amount for a loan amount. But if someone's got $100,000 mortgage, K stands for thousands, typically you would have what we call an offset account over here attached to the loan. And any money that you've got in that account, let's use, say, a number of $10,000 is sitting in that account, it would offset your mortgage. And the way that happens is that your interest is calculated daily. So from a bank's perspective, if you've got 100K in there, or a lender's perspective, you've got 100K in there, they're charging interest on that. With the offset account, sorry, yeah.
Yeah, are all loans, is the interest calculated daily on all loans?
Majority of the loans, and I would say pretty close, 99.99% of mortgages are calculated daily.
Okay.
There's always going to be one out there, Greg, that's not. So you just got to put a disclaimer in there.
Yep.
So the way this operates, because it's calculated daily, because you've got $10,000 sitting against 100, you've got 90K there now that the interest rates are actually being charged at. So you're actually saving interest on $10,000 worth on your mortgage. You're still making the same amount of payments. So that money that was going to paying the interest is now going off to pay off that $100,000 directly, not towards interest payments.
So off the principal.
Off the principal.
Which is what you want to be doing.
Absolutely, that's what you need to do.
Yeah.
So during the month, you may find that you've got down to, say, 5K into the account. So now we've got 95K in the account being charged the interest.
Better than 100K.
Absolutely. Again, you're still saving money. The offset account is where a lot of people make the mistake. They don't put lump sums in here. What should be happening is that you're using all income that's coming in, be it Mr.'s wages, Mrs. wages, and if there's any other people that's involved, you've got any lump sum payments from the ATO, or you've got A and B coming in, anything, any money coming in should go in there, and then you pay anything, electricity bills, your mortgage gets paid out of here. But that money, while it's sitting in your account, instead of saving interest, not earning interest, it's saving interest. And it's very, 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 very tax effective in that way. So
it saves more interest than it would earn interest.
Yes, so let's put the 10K over here, and you earn interest in an account, you're earning money, and let's say you earn $1,000, you'll pay tax on that.
Correct.
Where this is and that's a fact, this is offsetting, so you're saving money, it's tax effective. And not only that, it's helping you pay off your mortgage a hell of a lot quicker.
Much quicker.
Much quicker.
This is very powerful.
Oh, it's
very
powerful stuff.
Steve.
And you'll find a lot of people are not using this. In some cases, some people have got it set up and they don't know if they've got it set up.
Or they don't know how to use it.
And they don't know how to use it. So the first thing is to check your mortgage. That's the number one thing, is to see if you've got an offset account already attached. And if it is attached, then you start using it in this particular manner.
Steve, what about the credit card scenario, the 45-day, 55-day interest-free?
Yeah. People who've got good discipline use that Adrian, and it's a very good mechanism to accelerate again, because with the free period that you can have on credit cards, and you can use any credit card that you like. You don't have to use it as the same lender. You can use it from somebody else. If that credit card suits your situation, you use, say, a 50-odd day free credit period. You use that to spend, buy all your goods on, your groceries, petrol, and so forth. And at the end of the month, you've got your $10,000 there. Your credit card comes in. The bill, say, $2,000. Well, then you pay it out of here. You've paid no interest, but you've had the full benefit of the money that's sitting in the offset account,
30 days,
working against your mortgage.
Plus, you get rewards.
Well, yeah, you do. Yeah.
Every 10 years you get a fry pan or something.
That's it.
A trip to Noosa I hear coming, you know.
Toaster.
Steve, one more question I've got
Yes,
for
sir.
this, and that is, what's the difference between an offset account and a redraw account?
Good question. Redraw, a lot of mortgages will have what they call redraw. So on that basis, you can take the money back out if you're ahead of making advance payments. But with redraw against the loan account, often there is a minimum amount that you have to take out. So with some lenders, it may be $1,000 or $2,000. So then you have to take that lump out. Where this, you can take out, you know, $1 if you want. Okay.
Right. And usually there's a fee that goes with it too.
Well, not on the offset account, but on this
On
one.
the redraw, yeah.
On a redraw,
On the redraw.
there could be a $5 fee or $10 fee. So if you've got to go and buy something and you take out $2,000, it means you've got to put it back in again. And if there's a fee attached to it, well, there's a cost that you don't really need to have when you've got an offset account.
This is, you know, if the viewers are not doing this, they should be looking at it.
Number one thing is to check to see if you have an offset account to your loan, and if not, then start looking at products from lenders that do have that facility. Number one.
Okay, fair enough. Then that just one more little question.
Yep.
That offset account, does it operate like a normal account, like a everyday account? You can have a checkbook, you can have this, you can have that.
You set up your checkbooks separately, but yes, they can operate as a typical savings account that we would have traditionally been introduced to from our school accounts. It's the same as that, but now they've got the offset accounts which are attached to the mortgage, which gets you these benefits.
Right. Excellent.
Yeah.
Very good, Steve. All right. Well, I think we've still got the fortnightly and weekly payments to go.
Yes.
And the one-off lump sum payments.
Yes.
Before we get stuck into those, we need to go to a break.
That's
so
right.
viewers, we'll just take a short break and we'll be back after these messages with the Mortgage Busters show.